about 126 billion naira will be offered at the central bank by the Central Bank of Nigeria in today's primary market auction. Today, traders at UBA say that they expect Treasury bills market to close with mixed sentiment. And I have Chuka Nwachukwu, the head of bond trading at UBA, to discuss the midweek activity in the market. Thank you so much for your time today, Chuka. Let's get into what we're seeing play out today with that auction.
Okay, thank you, Ken. Like you rightly said, we have over 125 billion on offer. This week we've seen a mixed sentiment on the trading floor. We've seen a lot of activities on the shorter end as well as the middle end and then the longer end as well. Today's auction, the last auction came out at the longer end came out at 4.79. And we expect about 20 or 30 basis points upward movement from today's auction.
All right, but in your view, though, how do you think this compares with the previous auctions?
It's still the same old demand. We obviously see a lot of subscriptions. And so the DMO will try to manage the subscription as much as they can. And so, with expected upward movement in yield, we see that people also will be cautious, going into the auction. And so, because we've seen this play out on the secondary market, where we've seen yield move slightly upward, from the previous
all right, then, so earlier you're alluding to activity in the curve there, and I'm trying to get more clarity, especially the yield curve activity in the middle, going into the rest of this month. Where you think we can see more activity or interest there?
Interest, especially on the longer end, like I said earlier, and so we've seen that the yield will continue to move up. Expectation is that yield will move up. Throughout this month of May and then June, we have little liquidity coming in terms of coupon payment and other liquidity. So we see that yield will move up slightly, between, like I said, between 20, 30 and 40 basis point upward movement.
All right, but looking at the bonds market, though, what are your expectations going into the rest of the week?
Yeah, the bond market has also been mixed, though we've seen a lot of activities on the 2025 and 2026. That's the shorter end of the curve. We saw a bit of a bearish sentiment on the longer end, which is in 2050. So we've seen that the yield has also continued to trend upward on that side of the market. So today we've seen yield move between 5 to 10 basis points, and then this will continue going into the rest of the week and then the rest of the month.
But looking at other instruments, especially like the Eurobonds, for example, I'm trying to understand the wider implications of what we see. We just saw from JP Morgan for this going forward.
Okay, the implication on that JP Morgan is that it will cost the country more to borrow because, of course, the country will be viewed as a high-risk environment. So, but I expect that the government will come down to the local market to borrow more, and then doing that with them means that they have to make the yield more attractive, and making yield more attractive means that yield will have to go up more. So we expect that the yield to move up. Like I said, it's still the same trajectory movement as we expected.
All right, but looking at liquidity in the market now, what can we expect going to for the rest of the month then?
The system is slightly still liquid. I guess some of the funds from the last FAC that was paid is still in the system. So we expect that this month we have less than 100 billion coupon payment to be paid. And so that isn't much compared to what the liquidity in the system is ought to be. So we expect that going into the month, the liquidity will not be as robust as the previous month, but the system will still be slightly liquid.